Love music, love life, smooth 98.1. It is a hump of the week, Wednesday morning, 33 minutes past 6 a.m. Can't believe it's Wednesday already, but hey, I have absolutely no complaints. Good to be here with you once again as we step into the world of business on Business Express, brought to you by Into Switch. My name is Ayokunmi, and we're going to be having an interesting conversation this morning talking about the half-year earnings of Dangote and BUA Cement. That's BUA Cement. Now, it's interesting to note that both firms made more money in the first 6 months of 2025 than they did in the whole of 2024. Now, that is wild stuff. I'm going to talk about that and everything in between. And joining me to talk about this issue, to give us some understanding as to how these companies made serious bank. Bala Augie is joining me. He's the editor and partner at MoneyCentral. Very good morning to you, Bala. Great to have you on the show.
Good morning.
Yes, it's a pleasure to have you on the show this morning, Bala, to talk about this. And let's begin this way. Let's start with Dangote Cement, which grew its revenue by about 17.7% year on year to 2.07 trillion naira. What exactly were the triggers for this growth?
Yeah, basically, in the period under review, the Dangote Cement benefited from price adjustments. Manufacturers increase their price of their products to fed off
Mm,
rising input cost. And secondly, and there is also high demand for cement locally on the bank of acceleration in construction work. The government has earmarked a lot of money for capital projects, and whenever there's capital project, there's always a higher demand for cement. So basically, Dangote Cement and its peer rivals benefited from favorable price adjustment.
okay, now looking at that, the firm's cost of sales rose by about 2.43% or thereabouts to 853.5 billion naira. Where exactly are all these really huge costs going to?
You mean the increments in cost, or?
Yeah, and the firm's cost of sales,
Mm-hmm, mm-hmm.
yeah, it rose
Yeah,
by 2.43%.
if you look at the number, the 2.43%, it's much lower than the current inflation rate, which means the company
Mm,
has done tremendously well in terms of cost containment, right? And if you also look at the company's cost of sales ratio, which measures the amount of money a company spends on each unit of product it produces, you find out that Dangote has done tremendously well in the area of cost containment, and that's pretty much because the company invested in newer greenfield assets, as well as the use of
mm.
cheap gas to power, plants, which helped it navigate the tough operating environment. So a lot of the cement makers, in terms of manufacturing, I think cement makers are more ingenious. They are more creative in sourcing alternative form of energy to reduce costs and then boost profit margin.
Right. Okay. But that is an interesting point. I mean, if the cement makers are doing this is completely by the side. Is there a reason that a lot of other manufacturers are not pulling the same stunt or doing the same thing, more or less?
I think the cement makers had been doing this for a very long time. They had been doing this for a very long time. You remember the cement makers were using LPF or low pour for then, which was pretty much expensive, but they had now had to switch to gas and green energy. And I think you're right. Consumer good firms can tap into it, and the government needs to invest more in gas infrastructure. When government creates an enabling environment for consumer good firms and other manufacturers in such a way that they have access to cheap gas, that will
Mm,
significantly reduce their cost of production. And it will help you and I in the sense that,
yeah,
when cost of production reduces, selling price reduces, and that it benefits the final consumer.
most definitely. Okay, now back to the talk about cement and everything there. Still talking about Dangote Cement, we saw a notable drop in their finance costs by 35% to about 216 billion naira. What could have caused this drop?
Yeah, basically, it could be that the company refinance some of its debts because you and I know that interest expense has been rising for most firm on the bank of higher bond yields. Because inflation is rising and the central bank, though the central bank has held the monetary policy rate, but interest has
Yeah.
been rising. I think it's probably due to Dangote's the ability of the company to restructure some of its debts, restructure from state. And again, in that finance cost component, foreign exchange revaluation losses are included.
Mm. Okay.
Yes,
Okay.
yes. So
Okay.
if you want to look at finance costs, you will strip out, you have to exclude the FX loss to get the true picture. So if you look at now in the last 1 year for manufacturer, FX loss has significantly reduced. Foreign exchange revaluation loss has significantly reduced, which is why you see the finance cost or the interest expense reduce. But basically, aside from the reduction in foreign exchange revaluation losses, which most companies include as part of finance cost or interest expense has been rising basically on the back of higher bond yields and higher interest rate environment.
All right. All right. Interesting stuff. But if you want to join us in this conversation and share your thoughts on what we're talking about, it's all about cement this morning and some huge earnings being made by both Dangote and BUA Cement as well. You can send your messages in to us on WhatsApp. Yes, the number is live. It is back on ground. And you can just always reach us today and going forward on the number 09 excuse me, 0911 999 0981. That's 0911 999 0981. You can also join us on YouTube. You can catch us at 981 FM Play. All right, back into the conversation, Bala. And let me talk about Dangote's half-year profits in 2025 of 520.45 billion naira. That exceeded its entire 2024 profit of 503 billion. Now, what exactly does that say specifically? Because I mean, looking at the fact that those numbers are for just the first half of 2025, it exceeded what the company did in the whole of 2024. I mean, what does this say about the operations of the firm this year compared to what they did last year?
Yeah, I mean it validates it validates what we're saying and what I just said earlier on. When a firm grows its revenue and it manages its costs, definitely, aside from exceptional losses, its profits will magnify. And Dangote Cement has impressed to the upside. And we're not surprised seeing such profit that the half-year profit has surpassed even the full-year profit. And the company has just started it to continue to magnify profits in the sense that its revenues will continue to grow and it will continue to contain cost. And what that means for shareholders, it means higher dividends, Yeah, investors should expect dividend growth this year, which should help drive share price higher. So the most important thing is those higher profits you are saying. If I'm an investor in Dangote, I'll be happy because it means higher dividend for me. It gives me
Yeah.
the impetus, to ask the company for higher dividends, right? And for those who hasn't bought Dangote Cement stocks, I think this is the best time for them to buy the stock so that they enjoy higher dividends and share appreciation. And if you look at
Mm.
Dangote, for instance, Dangote has one of the healthiest balance sheet among global peers of cement makers
Okay.
who are
Okay.
notorious for weak
Okay.
balance. Yeah, yeah, of course. If you look at Dangote's valuation, it trades around 10 times earnings. That compares, and most of its peers globally trade at a higher PE ratio. So what that means is that there are upside potentials for Dangote stock. It's going to appreciate, and we did an analysis on MoneyCentral, which we say going forward, we see Dangote stock price move from the 500 and 491 or 92 naira to 1,000 naira later. And that could happen probably towards the year end or early next year for investors who are patient.
All right. Okay, let's switch quickly to BUA Cement or BUA Cement, as they're popularly called. Now, their revenue in the first 6 months of 2025 grew by 43% to 289.5 billion naira compared to the same period in 2024. Is it safe to say that the firm had similar triggers to Dangote Cement?
Yeah, when firms operate in the same industry, they tend to be, affected by the same trend. You know what I'm saying? So fine, both companies, BUA and Dangote Cement, benefited from favorable price adjustment. The increased price of their product, right? And secondly, both firms did well in the area of cost containment. Even BUA itself, if you look at BUA's cost of sales ratio, there's been an improvement in BUA's cost of sales ratio. The company has been able to invest in alternative energy source. That's significantly helped the company reduce its cost of production. So yeah, it's true. Both companies did nearly the same thing. But for BUA, since BUA went public, right, a few years ago, the company's earnings has been growing, and which pretty much
Okay.
shows that there are upside potentials for the company. I mean, it's the cement industry is a lucrative business in the sense that there's going to be more acceleration in construction work, and that will trigger the demand for building material, which is cement.
So, can we comfortably say that your outlook for the cement industry for the full year 2025 is a very positive one, looking at the sort of demand within the construction sector?
Of course, of course. My outlook is I have a positive outlook for the and remember that we're in the rainy season. Construction work, there's acceleration in construction work during the dry season. So by probably September, October to not probably early next year, I see a higher demand for building material, and that's a plus for cement makers. It's good news for investors in that industry.
No doubt about that one. Very interesting times in the construction and cement industry as well. W Cement and BUA Cement doing very good and healthy numbers there. All right, we need to wrap it all up. Thank you so very much for sharing this very, very important information with us, Bala. It's been a pleasure having you on the show as well. We'll be talking with Bala Augie. He is the editor and partner at MoneyCentral. Have a great Wednesday, Bala.
Yeah, you're welcome, sir. Thank you.
All right, then. Do take care of yourself.
Sure.
And thank you all for being a part of the show this morning. Business Express. It's been brought to you by InterSwitch. And on that note, got to wrap things up. Don't worry. The smooth breakfast is definitely kicking on, working our way to 7:30 when we take a look at the papers on Freshly Pressed. But it's great music in between all the way.